Okay, gentlemen, well, welcome to the Money Management, NAB MLC roundtable, dealing with a particular type of inflation plus product in the market. And I thought we'd try and set the scene a little by talking about the sort of underlying market condition, and I guess the biggest impact on that was the recent decision in the US regarding quantitative easing and how we think that's going to impact the underlying market sentiment. So, given what we know, given what was discussed last week, what do we think that impact's going to be? And I'm going to start with you, Piyush. What's your view on that?
Well, I guess we've seen markets react instantly, haven't we, with sort of a rally. It's funny, at one level, you'd sort of think that markets would know that at some stage the taper's got to end, but until it actually arrives, I guess people are able to put it out of their minds. So look, we're in uncharted territory here with the extent of quantitative easing. Exactly what the consequences are when it does unwind, you can speculate. But I think we do need to think about how portfolios can be put together which might minimise volatility when that time comes.
Okay, Jonathan Armitage.
I think, following on from something that Piyush raised at the end there, is that the initial reaction has been a little bit of confusion. You see markets react instantaneously, but I think as people have digested the news, what you've seen is some question marks around how the Fed communicates going forward, and that has added a level of doubt into the way that the Fed will communicate, whether or not it's about tapering or another part of policy. And I think you're going to see greater volatility come back into markets, whether or not it's around Fed announcements, or as markets continue to digest the sort of uncharted territory that we're operating in with ultra low interest rates, not just in the US but across most of the sort of developed world, and the impact that has more over the medium term rather than just in the short term.
Tim Farrelly?
Yeah, I'm just picking up that one. I think the really critical piece is the medium term outlook rather than the short term outlook. Short term, we're going to get all kinds of volatility around this one. I think in the medium term, it's a non-event. With the original comments that tapering will be wound back, with the tapering will take place, bond rates in the States went up 1%. I think that's about the extent of it. I don't think we'll see very much more from here on in. The really critical question from here on in is when they start fiddling with the short-term cash rates. They've been at 0.2 for a long time. I think when that happens, and I think that's 2 or 3 years away, that's when the real excitement starts. So for the time being, I think we just see volatility, but we always see volatility, so there's nothing unusual in that. It's just the label we put on the cause. And I think from here on in, the whole QE is a bit of a non-event.